Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR Stock, NIO's NIO Stock, and AMC Stock. So today we're going to be going over the latest price targets for these companies, the latest news updates, and whether or not we should buy these companies individually. Now, I have published multiple videos on the stocks that I am buying right now, and those are the ones that you probably will need to check out. These are more risky plays, and these are very risky growth stocks, so always make sure to do your own due diligence and research before you invest your hard-earned money. So without further ado, let's jump right into today's stories. So we're going to start off talking about Palantir's PLTR stock, because recently it has surged by over 5% as of late because their price target has actually been upgraded by a Bank of America analyst. If you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises, and their PLTR stock currently trades for around $8.73. So if we go over to what the bears are saying about this company, they have around a $6 price target, so clearly they think the stock could continuously fall downward. However, the bulls, such as the Bank of America analyst in this video, says that the company is actually a good buying opportunity because they think the stock is actually going to go up. And if we have more of a middle price target, which is more where I sit at, we still have an increase in the price target sitting at around $10.81, so we could see some stock price appreciation over the next 12 months. But in this video, we're really talking about why the Bank of America analyst decided to initiate coverage on Palantir Technologies, and they gave it a $13 price target with a buy rating, which is absolutely phenomenal, and that's the main catalyst that is causing the PLTR stock to climb. The analyst actually says that Palantir Technologies is set to benefit greatly from the growing demand for artificial intelligence-based software, and this is going to be paramount for both their commercial clients as well as the government enterprises they serve. The analyst also rightly points out that Palantir Technologies is set to grow at around a 30% CAGR in regards to their revenue from now until 2025, which is absolutely amazing news. However, the bad news is that the PLTR stock price has fallen around 50% year to date, and investors are continuously flooding out of high-valued growth stocks because the current stock market is falling right now. However, despite this, the analyst goes on to give us 2 paragraphs of insight about what she thinks that Palantir is going to eventually be in the future, and she says this, and I quote, "While geopolitical tensions pose a risk to worldwide software penetration, they are an opportunity for Palantir's national security solutions in the US and allied countries, as militaries and intel services will need enhanced data and logistics capabilities as soon as possible." She goes on to say, "We expect US and allies' defense budgets to grow with increased focus on modernization and implementation of new technologies. Data is a strategic asset, and national security agencies have to make sure they operationalize it securely to better defend from near-peer threats like Russia or China. The recent Russia-Ukraine conflict made clear that time is of the essence and new technologies have to be incorporated as soon as possible," end quote. So not only is she saying that Palantir Technologies is going to receive a lot of benefit from this, but also other government contractors. And although this analyst is very bullish about Palantir Technologies, what do other analysts actually say? Well, Morgan Stanley, which is a very respected institution, actually has an equal weight rating for Palantir's PLTR stock, and they have a price target of around $16, and that's a 12-month price prediction, which would give investors around an 81% upside from their current levels. Likewise, a Piper Sandler analyst actually has an overweight rating for the PLTR stock, which is a buy rating, and they think that the stock price will also reach around $16, thus solidifying Morgan Stanley's price target of around an 81% upside. Other analysts who are covering the stock also think that Palantir Technologies is a good buying opportunity right now, and they have a $20 price target on the company, which would give investors around a 126% upside if they invest into the stock right now over the next 12 months, if these analysts are actually correct. Now, I don't want to just give you the bullish view of this company. There are also a lot of naysayers, and overall, analysts as well as investors do not see eye to eye when it comes to Palantir Technologies. For instance, 6 industry analysts actually say to hold the company for the long term and that you shouldn't buy or sell the company right now because the future of Palantir Technologies is uncertain. However, we have to weigh this against 3 analysts who say to sell the company and 4 analysts that actually say to buy. So like I said earlier, analysts clearly don't see eye to eye on this company, and many investors also don't see eye to eye on this particular company. Now, with that being said, we're going to move to another stock where analysts are actually in somewhat of an agreement of the true worth of this company, and that is NIO Stock, which recently surged around 10% today. The current NIO stock price is $22 per share. However, the bears think the company is worth $25, which is actually still an increase from the current stock price target. Also, the bulls and the analysts, as well as the investors who really like the company, say that NIO is going to be worth around $87.29 over the next year. However, if we take the middle of the road, we're going to say that the company could be worth around $40 or $39.92, which is still a substantial increase from the company's current stock price of around $22 per share. If you didn't know, NIO is a Chinese electric vehicle company, and they are absolutely primed for future growth. The reason why the NIO stock is surging right now by around 10% is because the overall stock market in the United States has actually started to rise a little bit. Also, ironically enough, many analysts actually have started to downgrade their price targets for the NIO stock. For instance, a Citigroup analyst named Jeff Chung actually recently cut his price target down to $41.10 per share, which is still pretty positive because the current stock price, like we said earlier, is around $22 to $23. However, he did cut his price target from previously being $87 per share, so that was a huge price decrease, but it's still well above the stock's current stock price. So still, this analyst anticipates that the company is going to at least double over the next 12 months, which is very good for NIO stock investors. Now, we do have to remember that NIO is a foreign company, so if you are not comfortable investing into companies outside of the United States, this may not be the stock for you. The analyst actually goes on to say that electric vehicles should actually start to come down in price in China compared to traditional internal combustion gas vehicles by around 36%. And as gas prices continue to rise, more and more people are looking at electric vehicles as their savior. Also, I want to mention that China's top investment bank, named CICC, also initiated coverage on NIO stock, and they actually consider NIO a leader in the EV market over in China, which is always good news for the company, especially because recently NIO looks very poised for future growth because they launched their ET5 mid-size sedan and their ES7 mid to large size SUV. So this means that NIO is continuously releasing new products, and they are set to dominate the Chinese premium EV market. Also, I want to mention that NIO stock has announced price increases for their existing models. Overall, these factors are going to increase NIO's top of the line growth, and that's pretty much what investors want to see in this particular company, that they have great growth prospects, they have really good price targets, and analysts are in agreement that this is a phenomenal company. Lastly, we're going to talk about AMC stock to determine if it's a buy or sell. Right now, the company trades at around $12.51. The bears say it's only worth $1, the average is around $10, and the high-end, very positive investors and analysts say that the company is worth around $35 per share. If you didn't know, AMC is an entertainment company that owns a theater chain. They are an international movie theater chain, and it recently had one of its best weekends. They have absolutely plummeted in price during the lockdowns. However, they had major short interest, which caused the AMC stock price to absolutely surge, and ever since that initial surge, the stock price has slowly been tumbling down. And I've actually warned investors about this multiple times. However, some traders still think that they can squeeze some money out of AMC stock, so we are going to determine that. I personally already went in and out of AMC stock, particularly before this giant drop right here. So I was originally riding the momentum upwards, and then sometimes you just need to take profits instead of riding it all the way back down. And some people are still investing into its current stock price because they think it's going to surge upwards, which is possible. However, to me, that's gambling, and that is not investing. The reason why the AMC stock originally fell regarding their stock price is because their revenues fell by around 77% back in 2020 to $1.2 billion, which is a substantial decrease from the amount of revenue that they brought in the year before, which was around $5.5 billion. However, in 2021, the revenues jumped back by around 103.5% to around $2.5 billion for the year of 2021. And with new movies coming out, such as Jurassic World Dominion and Top Gun Maverick, we have seen an influx influx of multiple people attending movie theaters again, because recently, just for those 2 movies, they had around 4.9 million guests watching those movies at various AMC locations. So, is this going to help their bottom line? Well, I would say yes, it is going to help their bottom line, but the catch is this. Originally, even before AMC stock surged, the overall stock for the last couple of years has been on a massive downtrend. The author of this Smartly Full article actually says this, and I think this is something that investors really need to keep in mind. One, you need to determine if you are focused on investing for long-term growth and stock price appreciation, or are you a stock trader who is trying to time the market? And in my personal opinion, you are not going to be able to time the market consistently over the long term, and you're going to end up losing a lot more money than you make, when you could do the much safer and stable option to build wealth in blue chip stocks, ETFs, and a couple risky growth stocks here and there, so you can add some diversification to your portfolio. So first, you need to figure out what type of investor or trader you are, and then secondly, I want you to be aware of this, which the Smartly Full author rightfully points out. And he says, and I quote, "AMC's cash balance was bolstered during the meme stock frenzy of 2021 when it could sell stock to the public at high prices, an option unlikely to arise again. Meanwhile, its $5.5 billion in long-term debt is a ticking time bomb awaiting to explode. When the principal amounts come due, which will be as soon as 2026, AMC must either make the payments in whole or hope to refinance to extend the due dates," end quote. So clearly, AMC is still in deep water right now, and I personally think that the company is going to not please investors over the long term. However, what I do want to point out is it's actually good that AMC has a very low PS ratio, or price to sales ratio, of around 2, which is actually pretty good. However, if we look at AMC stock historically, a 2 is rather high. So the author of this article concludes that there is no reason to buy the stock right now because it's not worth taking on the risk of AMC stock when you can invest into other stocks or even ETFs such as VOO, especially because the stock market is falling right now. You want to get that at a cheaper price because over the long term it is going to appreciate, but this really depends on what type of investor you are. Like I said earlier, are you a long-term stable growth investor, or are you a trader and you want to get rich quick, which in my opinion that requires timing the market and it's not going to be a good long-term strategy for you. But I would love to hear your thoughts down below. Remember to go and smash that like button right now for more videos like this one, and I'll see you in the next YT video.